Hey everybody, Josh Sigurdson of World Alternative Media here, and of course I'm joined by author and economic analyst here at WAM, John Sneisen, and CIBC has gone negative on their bonds. So John, can we talk a bit about this? This is kind of a crazy story. I know the CBC has kind of gone into this a bit. A few different medias have kind of gone into it a bit, but they haven't explained why, how, what's going on. So with lack of anything better to say, let's just get to it.
Sounds good, Josh. So we looked at some very interesting article that you sent me the other day about that CIBC, the bank now actually, it's a Canadian bank that for first time in history in Canada actually, they're issuing their corporate bonds in negative yield. So the negative yield on these corporate bonds is at negative 0.009%. And this is an example here, as CIBC put forward, is if you invested $100 and 0.54 cents, you will actually get $100 back in 2022. Fantastic investment.
Wow,
that's
a grand investment right there. I got to get me some of that.
Exactly. No, it's interesting with these negative yielding debt, and we were talking about this back in late February. We put it up, I believe, at the 1st of March. Actually, we were talking about negative interest rates, and we were predicting a lot more negative yielding interest rates. But at that time, I think it was below $1 trillion in negative yielding debt around the world. But today, it's a whole different ball game, and we're at 11.7 trillion right now. And actually, at the end of May, that we looked at, which was, 2 months after we did our video, it was $1.3 trillion, and it actually have increased over 1,000% in just 3 months. It's insanity. Of course, a lot of it is, the Eurozone and then Japan. That's the two biggest ones, of course.
Obviously, it's reacting to that. Yeah.
So, they're just reacting to a horrible monetary policy that, the Fed and all these other central banks have put out, where they printed money out of thin air. And then, of course, they have issues with the deflation going on right now in both Europe and in most Western countries, because baby boomers are retiring, and our millennial generation is not able to come and help them out and buy their assets or buy their houses when they they downsize and when they retire. So we're gonna have a huge, massive deflationary pressure on our economy, which is not what the central bankers want. They want massive inflation. They want the inflation to go up, because if the inflation goes up, that becomes cheaper. If deflation happens and deflation gets more rampant and higher, or lower, if we can say that, then what happens is that debt will become way more expensive. And a country like the United States with $19.3 something trillion right now, it's going to be unsustainable, and they're going to default on their debt instantaneously if they let the deflationary pressure happen. So they need constant inflation to happen all the time.
Yeah, and of course it's been unstable for a while. It's been building for a long time. We've made a lot of predictions in the past that have come true, and people haven't listened. But we are watching everything that we have been talking about for so long coming true. And I know I've been talking about negative interest rates since about 2009, where I actually heard, I think it was Ron Paul, he was talking about how we're going to go negative, and we're going to see taxes instead of interest. And I mean, and that's it's crazy, because this isn't the kind of vindication we want. We want good news, but unfortunately, the way the world is going right now with the manipulated economy and the way that the markets are working, or not working for that matter, this is the kind of vindication we're getting.
They have to manipulate every single aspect of our economy in order to keep their system running. If they didn't manipulate it, we would have massive crashes and depression right now. And we're not seeing that. They're trying to, we'll talk about it a little bit later about what's going on with the stock markets and so on.
But they should be just pulling that Band-Aid off quickly.
Oh, exactly. No, they just should let this whole Ponzi scheme just fall to the ground and do its course, which it should be is faulting. We're going to go quickly into the Eurozone, and actually now there's starting to be a lot of corporate debt, because the 11.7, that was public debt, that was the governments and so on that have spent. But now what's happening is actually corporations and of course CIBC, as we mentioned, but in the Eurozone there's over $512 billion in corporate negative yielding debt, and a lot of people are desperate, trying to go to corporations and invest in their debt, because corporations are way better than investing in government debt. But there's a problem, because the pressures from the government and the central banks, when they set the interest rate, their debt is becoming very obscured and very screwed up, because now they actually have to issue negative yielding debt, which again, we did the example of you actually lose money over the 5-year period when you invested into that debt. With $512 billion in the Eurozone in negative yielding corporate debt, we have Deutsche Bahn just issued $350 million euros in a 5-year bond at negative 0.006. It's not much, but it's negative. It's not giving you any money back. Gold will give you money, not this crap.
Physical.
And then of course Deutsche Hypo, which is a corporation in Germany again, had $1.3 billion at negative 0.0771%. I'm going to go and just quickly go through the current numbers, that is, when it comes to the government debt, and see who is the biggest ones to overprint money, because the public debt is mostly the kings in economics, where they believe that they can go into a whole bunch of government debt and spend that money into the economy, and voila, we will have a wonderful utopia to live in.
Alakazam.
So Japan, and this is when we did our video, Japan just, I think it was 1 or 2 days before, they just went into negative 0.10% in debt. Well, now they actually have issued $6.4 trillion since that time in negative yielding debt. $6.4 trillion. That's insanity. That's over just 3 months. They issued that in new debt, the actual Japanese government. That's how much money they've been overspent.
Absolute insanity.
It's completely insanity. And of course, France is, behind there, 1 trillion. Germany 0.95 trillion, Italy 0.45, Netherlands 0.3, Belgium 0.2, Spain 0.2, and Austria 0.2. And then the other negative yielding public debt countries is Finland, Ireland, Sweden, Denmark, Switzerland, Slovakia, Slovenia, and Luxembourg. There's a lot out there, and what this have cost, Josh, is it's forced people to go, and investors and hedge funds and so on, to go into very risky, what they call almost junk debt, which is basically countries like Venezuela, El Salvador, Iraq, Ukraine, Mongolia, Zambia, El Salvador, which yields from 11 to about 6-7. So there's not much left that actually yields you a high yield anymore for these investors to earn a huge buck, even for the hedge funds, which is insane. They usually had a yield of 26, 27, 30%, but now there's nothing left for these guys to actually make any money anymore, and their Ponzi scheme is coming due because they pressure these rates so far down. But the problem is they're just constantly moving money into these funds, and what is happening in the United States, there's tons of people pouring in money into corporate debt, but the problem is this corporate debt is very high yielding junk debt, and the problems with that is that actually right now the default is at the fastest pace in 6 years in the United States. So it's really ramping up. The whole Ponzi scheme is teetering on the edge. It could fail anytime. It's not like it could sustain itself. If they let it go, it will just fall the same day. So what we're seeing is just this artificial life support of the economy is just forcing, it obscures the whole.
The economy itself is artificial. It's an artificial economy with artificial forces supposed to protect it, which is the Hegelian.
Zero free market. It doesn't exist whatsoever.
Well,
and
you can't have a free market with government.
Communist or whoever you are, I tell you, go and study economics first of all, because you don't know what you're talking about.
Dude, they can't get out of their mother's basement. How can you expect them to read anything into economics?
Oh, exactly.
They just feel like they're plundered because they are too lazy to actually go and do anything for themselves.
And as Bloomberg has said recently now, they said, negative yields infecting credit markets as investors capitulate. So, they just give up. They just go and buy this negative yield because, what the hell am I supposed to do? I can't do anything. This is just going insane. And actually, Bill Gross, former head of PIMCO, which is one of the biggest bond companies used to be in the world, he actually exited at the right time to get out of most of it, you know, and exit that whole like massive bond funds that PIMCO had. But he's now an bond investor at Janus Capital Investment, and he said our credit-based system, financial system, is sputtering, and risk assets are reflecting that reality, even if most players, including the central banks, have little clue as to how the game is played. And he said the system is a twisted game of Monopoly. And he also went on to say that the Fed is worshipping false idols, which, you know, is their monetary policy. He said that they've gone insane, basically, over at the Federal Reserve.
I would say that they were insane the second the act was signed in 1913, but that's just me.
Totally, I'm there with you, Josh. I totally agree with you. And of course, you know, with the baby boomers and everything, as we talked about, this whole market is coming down, and you know, we said back in our video, we were talking about monetary gravity. I haven't heard that term too much, but I call, you know, what goes up must come down. It's gravity, which doesn't exist in a flat Earth, of course. God. But no, sorry.
Let's not go into that.
No,
it's just annoying, man. Okay, let's okay. What's next here?
No, so well, of course, you know, we meant to be said that, you know, a lot of these bonds are going to go very negative, and well, here we are, and we were right, guys. You know, we tried to do our very best to actually give you the very best information and be out there and do a lot of research, and it takes a lot of time, but we really are passionate about what we're doing here, and we really want to help everybody.
We're not giving us like the economic advice that one advisor would get after they get some kind of Keynesian degree from some university. We can't legally do that because, of course, we'll be shut down. However, I will say that from our opinion, what we're trying to do is give you our opinion. You can look it up for yourself and see that we aren't wrong, and with that, you can protect yourself, protect your family, protect your friends, spread this information. We're just messengers. You know, we are all in this together as individuals, and we need to fight this collectivist control structure and manipulation that's plundering our free will and shoving us into servitude and shoving us into debt enslavement.
Oh, exactly. And you know, like, you have the whole market is just, you know, completely, utterly damaged. And of course, one of the worst industries in the US is the fracking industry. They actually, I believe, had a bailout directly from the Fed through their capital gains surplus account, and they are, you know, like, still doing okay, but they should have really, like, fallen now, and it's, you know, a lot of manipulation, of course, from my book. And look forward to this, guys, what's coming up in the next couple of weeks, because I'm getting close to getting through all this information. It's ridiculous about the exchange stabilization fund, guys.
You should, that's some crazy stuff.
Be very excited about looking into our report there. But these guys are in there manipulating. It's the Fed, the ESF, and the IMF. They're in there manipulating every single aspect of the economy. And going back to, we were talking about how it was manipulated. Well, these high frequency traders on Wall Street that, you know, they use its algorithms that, you know, trade based on what kind of inputs they are looking for, and they're looking for, you know, yen versus the United States dollar and so on, and they're looking at these, and the Fed and everybody else have learned to give them those false inputs, so they push up the markets, and it's not like the mom and pop investors that are in there giving anything. And I want to end this whole thing with something very interesting. I'm going to go on just the last year, like how badly the US dollar debt has dropped in value. We go over, you know, the debt here, and what has happened. The 30-year debt, you know, it's 2.96% in 2015. Now it's down at 2.28, and all these long-yielding debts, like, they're dropping like a rock right now, and they're going further. Like, it's we're getting to a point where the world is going to end, and the whole debt empire is going to just collapse down.
The world itself isn't going to end. The debt empire.
The debt empire. Sorry.
We don't want all these guys like, you crazy conspiracy. But John, as we finish it up, because we're running out of time, but as we finish it up, what is your advice out of your personal opinion? You got to make that point, because the government will come after us. But what is your advice out of your personal opinion for the people, especially people involved with a place like CIBC?
Well, I would say like be very wary about what's going on there, and look for other options. Look for smaller, maybe credit unions, because they're less risky. Even though it's still in the banking system, it's still risk.
Yeah.
I would say, you know, personally, I put my money and betting on, especially in a negative yielding territory. There's nothing, like people say that, oh, well, gold does not yield anything. Well, it definitely yields better than negative interest rates, guys.
Certainly. Well, as this all comes down around us, we will keep you updated. We're going to keep giving you as much information as we possibly can. We're busy all the time trying to get new information for you good people. So please check the links below. Find us on Facebook, YouTube, and Twitter. You can donate at Patreon and GoFundMe below. And we'll be back at you with much more coming up soon. So this is Josh Sigurdson, John Sneisen signing out from World Alternative Media. Find the truth,
Be the change.